Welcome to the C-Suite podcast from Money20 here in Amsterdam. For these special episodes, we are collaborating with SumSub and their What the Fraud podcast, and I'm very pleased to introduce their presenter, Thomas Taraniuk.
Thank you very much, Graham, for the very warm welcome. SumSub is super excited to be here at Money20 in Amsterdam. And of course, we're very excited to interview some really cool guests on our show. Not only merchants, but fintechs and payments leaders who are on the edge of their seats around, of course, a hot topic, fraud in payments and fintech. Looking forward to today with you, Graham.
Yeah, it should be some excellent conversations, so I really hope you enjoy them.
Well, Mitch, thank you for joining us on this episode of What the Fraud. And of course, both of us here at Money20. What have you thought of the events thus far?
Oh, it's second day in and absolutely loving it as always. The key part is you just get to see so many people that you haven't seen in months or sometimes a year since you were last here.
Completely agree. Everyone's talking about innovation, moving faster than regulation within this industry. Where do you think the tension is most as a compliance, or building most as a compliance lead? And how do you keep things moving without slowing growth within your industry and specifically your business use case?
Well, lots of good questions in there. Let me talk first about, we hear these buzzwords a lot of innovation, everyone's innovating, and regulation, and what does that mean?
Yes,
I look at it having three distinct ways or channels that you can approach this. Is regulation stifling innovation? And we'll come to that. Is regulation keeping up with innovation, i.e. look at what's happening with the crypto spaces and AI, are people being protected? Because that's one of the duties of regulation, is to balance competition but also to protect people. And then is regulation actually creating innovation? So let's go back to PSD2. Open banking only really happened, and all of those advances in fintech and all of that starting and taking stuff from the banks was all because of PSD2. So regulation actually creates innovation. So then taking that to where you were saying next about, what has the tensions been and what has happened, I think in the fraud space, have we really seen a lot of new regulation? And I would say probably not. The biggest one in the UK, though, that we have seen is APP fraud, right? Yeah. PSR, a few years back, led by Chris Hemsley, came up with a concept of moving where the risk is owned to the institutions to prevent authorized push payment fraud. Now, for me, that was a huge shift, and the industry really had to stand up and react to it. The very interesting dynamic was, all of a sudden, the financial institutions were on the hook. They were the ones that were going to lose the money, and that really created a lot of innovation as to how do we prevent fraud. For all of the noise that the industry was making on all sides of it, something really did happen. We actually managed to achieve something as an industry to reduce fraud. For me, that was a great outcome. But then you start talking about tension, to your part where you asked about tension. Where I think it's really interesting, and people forget, is you overlay fraud and consumer duty. Fraud creates friction. You want to stop the bad actors. But you also have an obligation under consumer duty to not impact people's payments, the flow of funds, etc. So you could be doing everything right morally. I want to stop these payments to protect you from fraud or to protect others from fraud, the victims that might be there. But if you get that wrong, then there's a consumer duty claim that comes through. I think that tension's super interesting, particularly as there isn't a regulatory specificity for fraud like you do for AML. So what does that mean when things go wrong? The question I ask is, are we now relying on ombudsmen to really unpick and figure out what's right and what's wrong? And is that where we want to be as an industry? I would really question that and challenge that.
Mitch, from your experience, what types of fraud do small and medium-sized businesses face most? And how would you design a strategy, for instance, to protect them without actually adding unnecessary friction within their lives and day-to-day, let's say, payment practices?
Again, I'm going to split this into two parts, because friction sometimes is there to protect the customer directly. And sometimes friction is there not to protect that customer, but to protect the industry at large or to prevent bad actors. So you're not actually causing friction to protect that company. You're causing frictions to make sure that you're not getting a fraudster company coming through. So let me come back to the first part of your question of what are the typologies that we would say that SMEs would see the most or be victim to the most. For that, two come to mind immediately. One would be invoice redirection.
Okay.
Right? So the SME hears from who they believe to have been their supplier saying, oh, we've changed our bank account details. Let me give you the new details. The SME then makes a payment to the wrong third party. They believe they're paying their supplier, and unfortunately it goes awry to the wrong person. It reminds me of my time with my daughter, right? We used to watch Dora the Explorer when she was much, much younger. And then Dora the Explorer, there was always that stop and think. That's where you create friction in the payment journey. You're like, stop, think. Has there been an invoice redirection potentially? Is this really your CEO that's called you asking you to make this payment? Have you validated it, right? Because that's another type of fraud that SMEs do get hit with. Someone calls up the Treasury department with AI and the advent of that and, generative AI, you can sound like anyone you want, right? Sounding like the CEO saying, I need you to make a payment to this beneficiary, do it urgently, and people following that. So you can create friction in the journey there. I think the other part, though, is where we want to protect society and industry at large, and the friction that comes with that. And that's where SMEs actually really, really get impacted, because the good actors just want to continue their business. They just want to open a bank account, right? They just want to have a loan. But there's friction in that journey to ensure they really are who they say they are, and we're not dealing with fraudsters. And I think that's where sometimes there's two sides to friction. A, protecting that individual or that company, and B, protecting society at large, and that's a very different type of friction. There, you just need to keep running the stats. You need to keep seeing what's coming through the cracks, what's slipping, really being on top of suspicious activity, and identifying ways with that new data point to go back and see how did that slip through and how do we prevent that so there's a right amount of friction. And again, I bring it back to what I said in the first part. Consumer duty overlays that. If you're taking too long for anything and they're being impacted, the consumer duty aspects then come in. And then are we leaving it up to the ombudsman to decide what was right and wrong? Really interesting.
It is super interesting, absolutely. And when we're talking about the SMEs at large as well, it's really, really important to make sure that, one, of course, they are supported in making these decisions, right? Both on a regulatory framework point of view, but also in the back-end technologies. When we're looking at complex AI frameworks and the AI transformation that we're seeing across the industry, it's affecting fraud both as, let's say, a tool used by fraudsters to go after businesses and, of course, take advantage of these businesses, but also the users. But more importantly, do you think these tools and frameworks that businesses currently rely on are still fit for purpose when we're taking into account, of course, artificial intelligence designs, etc., which are aiming to actually take advantage of, let's say, gaps in businesses or SMEs?
So AI is changing everything, right?
Massively,
for everyone rapidly. Do I think people are keeping up? I would probably say no. I think let's unpick it, right? Let's really get into the detail here. What are the risks that are coming through with this new generative AI? So people can pretend with deepfake to really, really convince systems within financial institutions that someone is somebody else. So you've got that impersonation fraud. And yes, there is more and more tools coming in on the defense side within financial institutions to protect SMEs. But we hear a lot about AI to protect AI. Now, I've been walking around the floor and I've been speaking to a few AI firms here. What I find really interesting is I would really start challenging them on the floor here. And unfortunately, sometimes I don't think they're bringing the right people to these stands. So what I'm asking is, you have got on your stand mule fraud account detection. And I get really excited by that, right? The geek in me comes up and is like, tell me about what you're talking about here. How are you using AI to find and detect mule accounts? And what are your typologies you're looking for? And what does that look like? What's the delta in data that you're seeing for these versus other things? And unfortunately, no one's giving me that right answer yet. No one's really talking me through how they've solved that problem. So there are a lot of buzzwords out there. A lot of people are saying, AI's doing this, AI's doing that, AI's doing the other. But I really want to hear what that answer is. How is it doing that? What are the actual specificity and the rules that you're looking for? So taking that all into consideration, I think AI is actually supporting criminals because people are using that to innovate rapidly. And we're about to see how that's going to change the whole industry. That will also create more defense, but from what I'm seeing and hearing across the floor, people aren't keeping up with these threats yet, or at least they're not telling me how they're keeping up with them yet.
Well, completely agree. And when we're talking about the larger market in terms of the individuals who are actually utilizing these AI tools, right? We're looking at the democratization of fraud or synthetic fraud and artificially generated deepfakes on a wide scale. But when we're looking at businesses eventually sort of taking AI as a shield, what would happen if these, let's say, frameworks failed? Who would bear the risk at the end of the day?
So we touched on this earlier again about, what does who actually owns that risk? And I think it's really interesting. It's going to come down to very much what were the individual characteristics of that situation, right? How much did the victims that were involved actually take on board that they have got some form of responsibility, right? Their own standard of caution. And I think with APP fraud coming in and the way the industry is moving at large, people are expecting someone else to protect them. They're saying, I will make these payments, I will do this, I will do that, because my bank will protect me. My financial institution will give me my money back. And sometimes, if the financial institution has really messed up and not done what's proportionate and correct, I think that's 100% right. I think the concept where some people say, well, we are just the institution, what you do is up to you, and that's the end of it, isn't right. There is an obligation on institutions to help protect and defend and stop fraud. But I also think the customers themselves have to take some risk and some understanding and some accountability and responsibility. Look at SMEs, for example. You've got the directors of that SME. They have a fiduciary duty to that business to do the right thing. And if they're not and they're failing in those fiduciary duties, I think the risk should also sit there. So who owns the risk? Very, very dependent on the situation. Who's the one that did something objectively incorrect? But we come back to what I was saying before about, are we relying on solving these problems with the ombudsman?
That's the thing, and it's a very manual and difficult task to think of, but absolutely right. I think it is broken down into, there's a fiduciary business duty, the owner, etc., to actually look after their community, their shareholders, and of course the community, the actual wider ecosystem at large.
Yeah, exactly.
But at the end of the day, individuals need to be educated on the risks at hand, the types of fraud out there, to make sure that they understand that friction is there to protect them, not to make them or their lives much, much more difficult. But of course,
agree.
We're at Money 2020, Mitch, so I would love to ask you the question of the day. What's one piece of advice you would give to fintechs and payment companies here who want to scale quickly, but of course remain compliant at the same time?
Scale quickly, fintechs, but be compliant. So there's a few angles to this. One, make sure you've got the right people in the room when making decisions. So make sure the compliance person that you're working with has a seat at the table up front. Make sure it's the right compliance person, so A, a person that can make decisions, and B, a person that's proportionate. Anyone that wants to scale fast needs to have that proportionality. What is good today and what's appropriate for your business today is only going to be appropriate for that size of your business. And as you're scaling, you're going to be smaller to start with. You need to have proportionate, acceptable controls there. But as you scale, you have to revisit. And I think that's a key part. Compliance people, I know I'm one, have a tendency to want to really stop everything and do things perfect. That's not the right way to innovate and to grow, because you're trying to solve for edge cases that may not happen when you're so small. So my advice would be, focus on that bulk, figure out what your 80% is, have tolerance for the edge cases, have budget set aside for the edge cases, but really solve the big problems, which are the quick problems, and then revisit. Look at it again in a few months and check, is this still right for the size of our business as we're scaling? It's like cleaning your teeth is what I always say. You don't clean your teeth once and then say, that's it, my teeth are clean, I am done. Compliance is like that as well. You have to revisit, come back, recheck. How do I advance it? What were the cases I've seen that can allow this business to grow and still protect everyone that's involved?
Mitch, I love that analogy as well. Continual evolving business hygiene. And at the end of the day, you need to do that within whatever sector you're in, of course, to make sure that you're compliant with evolving threats. And today, of course, those threats are unproportionately growing in terms of scale and also accessibility to fraudsters as well.
Yeah, completely.
But Mitch, really appreciate your time today. Thank you for joining us. And
Thomas, it's been an absolute pleasure. Thank you for having me.
I'm joined by Daniele, Chief Technical Officer or CTO, of course, at ING. I'd love to kick off with a quick question. Is that all right?
Yeah, completely.
I would like to ask you as well, how should banks balance rapid innovation with long-term system stability from your experience, especially as pressure builds to modernize everyday banks? And this, of course, is growing from 2025 into 2026 as well.
Yeah, look, multiple dimensions. The first one, rapid innovation is not everything that a bank should do. Rapid innovation requires a vision on what is the purpose for the clients, so you can tune the decision that you're making. And then to enable rapid innovation, you need to allocate your available resources in a mature way. So you need to find the strength not to devote everything to what seems like innovation, but also devote things to what I call the feng shui of tech, which is essentially clean up what you're sitting on and keep creating that space in your resources to explore and innovate rapidly. Then there is a big element of culture. ING is a phenomenal agile culture that is very conducive to innovation. It requires a framework of invisible controls around, right? Because if you just let 20,000 people run around, it's very difficult to converge on focused rapid innovation, right? So that framework is on the one side vision and purpose, and on the other is the whole mechanism on how to make agile work.
Super important, and continuing hygiene is also as well. How much of the hiring strategy is focused on, of course, making sure that employees at ING are, of course, great. They have experience around compliance, but also experience in future-proofing organizations such as banks as well.
Yeah. Look, we hire, we have about 20,000 engineers, right? So we keep hiring because people go, people move, people, right. That's one element. We hire specialists in various areas, and we cannot hire people that know it all, everything. So the challenge here is more the one of orchestrating that human complexity, where everyone is bringing a spike in knowledge, but has to be, able to function in the system. This is where the ability of the company is not delegating everything to everybody, but is orchestrating the complexity and having specialists intervening where it makes sense.
And there's so many different types of frauds, especially within cybersecurity and other areas these days. Yep. You need specialists who are very focused, right? Yep. And from your experience at ING, what are the biggest threats that you see within, if we're tracking, let's say, cybersecurity, and from a cybersecurity perspective?
Of course, AI is emerging. AI is emerging as a threat vector because it accelerates the type of attacks. It can make them more sophisticated, both in the exploratory phase, so when attackers are scanning your systems, but also in attacks that are directed to our clients. Everything around phishing and scamming, they can become so realistic that the level of protections have to evolve correspondingly. Yeah.
Completely agree. And when we have new, let's say, regulations such as DORA, the Digital Operational Resilience Act, this regulation is designed to, of course, enhance the resilience of financial entities across the European Union or the pan-European area. And this is specifically against cyber threats as well. What impact do you think it will have, as it is still a very topical sort of question and area that we're looking at? Yeah.
Look, it will have a phenomenally positive impact for at least two reasons. The first one is every bank and every large institution has always run DORA-like type of activities inside. They were just very deep in the organization. DORA brought them to the surface and gave the organizations a complete attention to the necessity of working on incident management, working on reliability, working on these nitty-gritty elements. That's one side. The other one, DORA has shed a very important light on the third-party risk management side, because banks like ours or all the others have a very fragmented supply chain of technologies, products, providers, and all of them play a role in the risk chain, right? So if one of my key providers goes down or gets an issue, I have an issue serving clients. The risk management along the chain is something that DORA really has brought to the surface and is a profound addition to the systemic reliability of banks.
How challenging is it to manage internal risk versus external third-party or procurement risk that you find at ING?
Look, the internal risk has the advantage that everything is under your control. So it's a matter of execution. Exactly. External risk is there is a legal boundary between you and the supplier, and then it's a part of negotiation. Some suppliers have use the DORA argument to try to raise prices, right? And there is not really a correlation between the two things, but that's negotiation. And the other challenge is that banks are regulated, And not all of the third parties are under the same regulation. Right now, of course, ECB is starting to raise the pressure on critical third parties. But historically, if you are a smaller third party, even pick one at Money 2020, you are not necessarily under the same regulation that we are. So we are carrying that risk in front of clients, in front of regulators. That is the challenging part.
And of course, you want to decrease that risk profile for yourselves moving forward, and especially as different businesses will rely on different software vendors for their everyday activities, for breaking into new markets, for launching digital services. It makes it ever more, let's say, cumbersome, of course. But from your perspective, Daniele, at ING, how would you future-proof your systems to ensure prevention on the fraud side is, of course, keeping pace with this innovation and your strategy for growth?
Yeah. Look, it's multiple axes. And some axes are simply clean up, if I may say, because knowing everything about your systems, so the data layer that you need to have is a precondition for everything else. So that's one action that the bank has been working on for years. The second action are, of course, new technologies. We keep exploring with emerging technologies that help us cope with this type of attacks and threats. And the third thing is work on the client side. So we have deployed features on our mobile app, for example. There is one that says, well, if you are getting called by somebody pretending to be ING, you can open the app, click a button, and it tells you, yes, it's us calling, or no, it's somebody else. Right?
That's an amazing feature.
It's a very simple feature, but has reduced in one of our countries that type of frauds by 50%. And this is intervening, helping the user and the client coping with the risk that they are exposed to.
Amazing types of course, anti-fraud procedures. Add a tiny bit of friction, but at the end of the day, they do protect both the user and the business at large.
Absolutely.
And the community is what we care about, especially from our side as well. From your perspective at ING, what do you see as the biggest growth in fraud in the future? Is there a specific type or vector of fraud that you're specifically worried about, or do you think it's going to be smooth sailing from here on out?
I mean, cybersecurity has never been smooth sailing, right? Because it's a marketplace too, right? So attackers, we need to raise the cost for attackers to the point where their business case is no longer flying. That's in essence
if it's
the big
still
game.
Profitable for them, they're still going to be targeting, right?
Right, exactly. Yeah. So it's a matter of raising the cost of success. The emerging vectors that we see are everything AI driven, and essentially two dimensions. One is everything around deep fakes, be it in interactions with clients, but also in the forging of documents, because of course a lot of our decisions are based on official documents. Forging is a risk that AI has increased massively. And the other one is AI is giving analytical capabilities to attackers to fingerprint us better than what was possible before. And that means that we need to be even stricter on the levels of protection that we have inside.
It's scary stuff. But I think there's a light at the end of the tunnel. Yes, completely agree. Daniele, thank you so much for your time today. Really a pleasure to meet you and learn more.
Thank you.
So we're joined today by Katherine Yeung, of course, the Chief Risk and Compliance Officer at 10x Banking. Katherine, thank you for joining us today.
Thank you very much for having me, Tom.
Very glad to have you here. You've worked across high-risk industries and led enterprise-level transformations across the board, Katherine. What's the key to embedding a risk culture that's proactive, not reactive, at the end of the day?
Tom, that's such a good question, and I can see that you've already done the homework about my industry background. So for everyone's benefit, I've been around the block for a bit, starting from consultant to aviation, and most recently in tech and also in payments.
Bit of everything.
Absolutely. And I think everything draws back to the point about culture, and I know culture is can be seen as a nebulous word, because what is culture? And culture is, whenever no one is looking at you, what will you be doing, right? And so culture for me comes back to one key thing, and it's around, I know it sounds cliche, but really winning the hearts and mind. What I mean by that is, first of all, it needs to come from the top, i.e. what is it that's important for the company? Why are we really doing all this risk management? At 10x Banking, we know banks are all about managing risk. And therefore, we really cascade across the company in terms of why it's important, the awareness, the understanding, and really down to the point about continuous learning. But the second bit I really want to emphasize is data. How are we really leveraging on the data insights to make risk management proactive rather than reactive?
That's very good points, Katherine, as well. But from your perspective as well at 10x Banking, do you believe, let's say, compliance onboarding or treating identity verification as a checkbox is correct? At the end of the day, do you think it can actually help businesses grow faster, especially working with 10x Banking?
So specifically for compliance, I know there will be folks who will continue to see this as a checkbox exercise, but the right thing to do to make sure that we onboard the right customers and there wouldn't be any fraudulent activities. But then the really key thing is around three things, in my view, that can really drive some of the profit engines for banks and for FIs. And the three things that I would like to emphasize is the 3Ds. By that I mean data, the decision, and the dynamic interoperability.
Got you.
So first thing is data. And what's challenging about existing banks is because they have a lot of legacy systems that's been around for decades. For example, I've had the frustration, and I'm sure, Tom, maybe you have as well, where you'll be speaking to your current bank account where the bank and they say, oh, actually, Tom, I don't actually know that you are banking with us, for example, for mortgage as well. And that shows the silo elements of it. So how do we really leverage on the data? But the second is around decision. And going back to the point about this podcast is around fraud, right? So how do we make sense of all these data points to really understand who this person really is, what the biometrics could be, and also how they bank with a certain bank, right? So having all this data insights is really important, but really ultimately is how do you enact that decision quickly and seamlessly. So by that I mean at 10x Banking we've been really able to have a processing speed that is world class, and by that I mean it's really exciting.
Super fast.
100K per second in terms of transactions. So
wow.
We are able to process that at 100K per second transactions for banks. And what that means really is that we are able to have AI-driven fraud checks enabling frauds to be stopped at the right time, or even, for example, being able to actually stop for certain accounts that are linked to suspicious activity, but still opening up the accounts that are not fraudulent for those who are impacted through our cutting-edge APIs, and that's really exciting.
Makes a lot of sense, Katherine. So if I took my shoes, let's say got in the shoes of a bank, and I asked you, Katherine, what are the key characteristics or tools my business should use as core infrastructure when we're looking at, let's say, future-proofing our fraud as a business and as a bank? What would you stress, and what would you stress, and why, Katherine?
So what I will stress is, and I'll share with you one stats. We've conducted a survey with 300 IT senior decision makers in banks worldwide.
Yes.
And what they say is that actually they know that they have to move from siloed banking systems to actually cloud-native banking systems to really draw upon all the data insights, all the dynamic decision-making that can be enabled. What I will say is they know there is a need and an urgency to move into a native cloud banking systems like 10x. However, why are they not making a decision, right? Because we know that it's a very tough decision to make for banks, but then we have got world-class AI-driven tools that we've announced early in the year to really help make this much easier and much more seamlessly. And going back to your earlier point, Tom, is why is it a growth engine? Because once you have the data insights, and there are two actually really exciting examples that I can share. One is around B2B, for example, where we have the data, then banks and FIs can actually say, hey, I actually know this data about this person, so they can actually sell the KYC as a service, and that's really exciting. And the other thing is around product personalization. By that I mean having all the data, knowing how a customer banks in terms of transactions, then they can have this gentle nudge, for example, and say, oh, Tom, I know that you really like traveling. Would you like to have this saving product with us that can help you in achieving your goal by the end of the year? Absolutely. So these are some hyper-personalization of product that can be happening, and that would obviously increase take-up of products, but also increasing in data retention of the customers. Stickiness
is always there, of course, but
absolutely.
Customers need to be protected, whether or not they're merchants, whether or not they're retail customers, and at the end of the day, it looks like you're fraud-proof. But of course, when we're talking about fraud, it is an ever-evolving game, right? Fraudsters will always find better ways to challenge businesses like yourself. So when you're looking to the future, future, what do you see as the main challenge within the market, especially when we're talking about new topics and new types of fraud in 2025?
Yes, and I'm sure you have heard AI-driven fraud, AI attack. It's getting at a very fast speed, and as Chief Risk and Compliance Officer, and obviously for banks, it's really important to have that scale to really enact and implement those changes instantly. And that's why I go to back to that point about our 100K per second transaction speed, because that would really mean that we can really process all these insights really quickly, but also stop those fraudsters instantly.
At the same time, is super important. You're matching the scales, which is perfect. So thank you, Katherine, very much for joining us today on the What the Fraud and C-Suite podcast.
Thank you so much for having me, Tom.
Our pleasure.
Thank you.
Thank you. So today we have David McHenry joining us from HSBC Innovation Banking. He is the Managing Director and Head of Global Treasury and Payments Advisory in the UK for the business. David, great to have you on here and great to see you at Money 2020.
Thanks.
HSBC, of course, is a big name, and the Innovation Banking division launched with the aim of enabling businesses focused, let's say, on innovation to compete globally as well. And 2 years in you are now, right? So what milestones or shifts stand out the most for you within that period?
Oh gosh, it's been an amazing 2 years. So, came into the business, in the UK primarily, and did a really focused transition process into HSBC's technology in terms of like 5 or 6 months moving from our old tech stack into HSBC's tech stack, and that was a great experience in terms of having tons of connectivity. It became a global team effort within HSBC to move innovation banking into HSBC's digital banking, core banking, payments capabilities, and do that. And as we moved through that transition, then it became a lot of work to enable new solutions for our clients within the HSBC side. So we've done tons of work of opening up gateways to help innovative and technology clients and our funds clients move throughout the globe with HSBC, enabling international subsidiary banking, things like that. And now we're starting to enable more scale, more capabilities with new products that we roll out. And we're getting to the point, too, 2 years in, where we're starting to select new solutions and new capabilities where innovation banking gets to probably be maybe the guinea pig, the first one to leverage a platform. And hopefully what we want then is for the rest of HSBC to start using some of these solutions. So it's been a wild 2 years, but it's been great. And I think our clients are really benefiting from a lot of these new capabilities that we have.
Excellent. It sounds like a wild 2 years, to be fair as well, David. What does HSBC Innovation Banking look like from the perspective of a bank designed to serve fast-growing customers? A lot of the customers that we see, for instance, at Money 2020, payments companies, fintechs, and also merchants and SMEs.
Yeah, I mean, innovation banking is really built around the idea that these hyper-growth companies that have very unique structures,
yes,
in terms of complex beneficial ownership structures, but are also moving from being very early stage. We're probably going to be their first bank account. They maybe have used banking apps when they were a bit smaller, but we were probably their first real bank account that they're going to onboard with us. They're then going to start building their product, growing, receiving revenue, then actually looking to grow globally. And we're going to be the bank that can help power them through those steps, whether it's with our early stage banking team, our venture and growth teams, all the way up to them going public and working with our corporate team while also banking venture capital and private equity funds on the other side. So it's really a whole kind of continuum of working with us through all those areas.
And it's a multi-pronged approach, I'm guessing, to, of course, fraud, especially within so many different business units. But my question for you, David, from your perspective, what are the biggest growing vectors of fraud when we look at, let's say, new risks across your client base? And if we're looking at, let's say, life sciences or tech as well.
Yeah, I mean, I don't think they differ all that much from any other business or even on the personal side. So we're being combated with fraud at every corner. There's phishing, there's spoofing, there are emails that you're clicking on that are going to try to insert malware into that. I think when you are a rapidly growing business coming from an early stage where it's maybe your first bank account and your business probably has 5 to 10 people in it, when you're at that stage, your hyper focus is building a solution for a problem and you are building a product. also at that time, you have to be thinking about building a business and building a company at the same time. And those are things where, the processes, the oversight, the financial acumen sometimes is something that has to develop just like the platform or the product that company's building. So that is where we probably see the most challenges of, okay, you or I can get an email from our CEO that says, we need to get this payment out today by 5 o'clock or we're going to lose a big deal. I receive those every once in a while, and in a bigger company, I'll recognize that and say, that probably isn't the right thing that I should be responding to or actually acting on right away. In a newer company, actually, that is something that isn't too far out of bounds of something that can happen, and so there's a risk there. So it's then putting in, okay, what are the processes, what are the things that a company should have to make sure they question and interrogate that, and then the ability to, properly, when it's a proper payment, initiate it, to have separation of duties, and then also have a banking platform that also is monitoring transactions to make sure if something does kind of happen, can we put the speed bumps into the process to question it a little bit more and make sure that we don't release something that maybe shouldn't have been released. So those are probably the biggest risks that we see coming up with a lot of our clients.
That's super interesting. And from your perspective, David, because we're talking about the checks and balances here of introducing, as you mentioned, speed bumps into the process. When we're talking about these speed bumps, they are often not frictionless. They're guaranteed friction for a lot of the customers or businesses which will want to use HSBC's products. But especially when you're talking to different business units, how difficult is it to communicate that these speed bumps need to be placed, and how difficult is it to roll out, especially as we move forward with different types of fraud? Well, requiring this as well.
I mean, when it comes to fraud and it comes to compliance and it comes to regulation, you have to explain it. Sometimes there's no way around it. We have to insert some type of dual factor authentication, different parts of the process that we're going to have. What you want to have is those come up in the right places at the right times. You or I or many of us, on a daily basis, we go onto a website here around Europe or in the UK, and we have to see the cookie notification pop up, and we have to say yes. And that's a speed bump for protecting us from and being knowledgeable about cookies on websites.
I'm glad it's there, though, to be honest.
Yeah, it's there, but it adds friction and an annoyance.
Yes, indeed.
So you have to find ways where you insert these into something where it makes sense and, have it be at the right times. You don't want it to be all the time. You don't want to always encumber a lot of things. So you want to have a platform that calls things out when it's the right time to call things out in the right way. So you're putting the friction where it needs to be, but if it's consistent friction or something like that, fortunately, especially for high growth technology companies that are building their own platforms, building their own user experience and client experience, they can be very vocal about how they want their experience with their banking platform or their banking partner to be. So we're trying to, one, make that be very thoughtful, very straightforward, protect them to the utmost, but also find ways to really enable the technology so that it is a good experience and they actually feel enabled by it.
Agreed completely, and communicating that is super important as well, and that's why we have these conversations. But you mentioned the technologies there. Of course, you've heard of this AI. It's a buzzword everyone's talking about, especially at Money 2020 as well. How is HSBC or HSBC Innovation Banking within your current remit utilizing artificial intelligence or machine learning to prevent fraud, and also within your compliance stack to make life easier for both SMEs that work with you and, of course, users and retail users alike as well?
Definitely. Well, I mean, it's interesting. It's AI has gained so much over the last couple of years, and we see it just even from our clients that we have the companies that are actually building the AIs and the large language models.
Yes.
In banking, it's without a lot of fanfare. It's not new. So whether you want to call it AI or it was machine learning years ago, things like transaction monitoring have been enabled by these platforms for years and years within banking. We're not processing these massive amounts of transactions on a daily basis, on an hourly basis, on a minute-by-minute basis without the aid of that technology. So things like transaction monitoring, AI is in those platforms. The fact that it's becoming ever more capable and it's having to defend against ever more capable fraudsters and things on the other side, that we're using that technology. But it's also within the onboarding journey of how much more and more can we digitize in an onboarding journey and use some of these platforms that are there of IDMV, but have AI as part of that. and then also enable in the future more AI where it's in more day-to-day transactions with our clients too, where things like our digital channels can be augmented with AI so that simple chatbots become much more useful. Things like cash forecasting can become much more useful because the AI helps enable a lot more contextual information and very quickly be able to interrogate and work with it.
I completely agree with you, and you've mentioned quite a lot of sort of avenues and areas for AI to be utilized, both on the front end, the back end, and on the continual monitoring perspective for fiat and, of course, their spending behaviors. And that can be a significant, let's say, blocker in terms of stopping fraud, mitigating it rather before it happens by, of course, identifying who is most likely to commit fraud potentially in the future as well, based on certain triggers and sort of vectors as well, fraud that we know. Of course, we are at Money 2020 as well. You probably had a lot of experience speaking with fintechs across these events. From your perspective, David, do you have one piece of advice that you could offer these fintech and payments leaders who are expecting to be high growth companies, right? And they're about to navigate, let's say, product scaling, innovation, and want to navigate that across risk of frauds as well?
Definitely. I mean, the biggest thing, and I kind of touched on a little bit ago, I mean, tech companies, whether you are a fintech company or a life sciences company or you're an enterprise or consumer, and you're starting up, your hyper-focus is giving a solution to a problem statement.
Yes.
And what's great about our clients is that they are hyper-focused on their client and their customer experience. My recommendation within that is they are scaling a product, they're scaling the ability to sell that product around the world and grow around the world and do that. Also, at that same time, it is building the foundation as a company, because they're also building a company at that same point in time. The company isn't just the product. They're also building the company, the processes, the documentation, the financial foundation that they should also be putting in place. So it is building out processes, it's building out policy, it's having that embedded at the foundation side of the company so that it can grow with them, because it's going to happen very fast. So being able to have things like separation duties, plugging into the right platforms, having a risk mindset within the company, having things like Treasury policies, and working with a board to have oversight of that is critical. And then also picking, I would say, the right partners that allow them to grow, so that, there are things that you want to onboard very quickly with that work very good at a certain stage of your growth, but do they enable your next stage? So you don't want to get to, now it's time for me to enter a new market, and this platform doesn't work for me, this banking partner doesn't work for me. Picking a partner that can work with you at all those stages of the journey and enable and open those gates when they're ready to happen is also, I think, really critical for hyper-growth tech companies.
Some really great points there, David, especially when we're looking at the scaling side. You need, of course, the internal frameworks and, of course, the vision to work with the right partners and right internal technologies to grow, right? And hopefully this is something that you're carrying across HSBC's overall branches across the board as well. It sounds like you're doing a great job. And of course, thank you for joining us on What the Fraud here today at Money 2020 Europe in Amsterdam as well.
Terrific. Thanks for having me.
Our pleasure, of course. Thank you, David.
All right, cheers.
So we have Lee McNabb joining us now, of course, working at NatWest as the head of group strategy within the payment division, or should I say payment strategy?
Payment strategy is probably better, but then we can add in partnerships and innovation at the same time. So lots of stuff going on.
So you do a little bit of everything.
A little bit of everything, a lot of none.
Excellent. Well, thank you for joining us here today at Money 2020. I'm excited for this conversation as well. We'd like to start off with a little bit of information from your perspective. What's the hardest part of modernising the payment stack inside big traditional banks on an international basis as well? And how do you keep up with, let's say, customer expectations as they evolve, to make sure that they're happy, but also not at risk of being defrauded?
Wow, lots of questions there in one. So let's start with a bit of context, right? NatWest, UK bank, 20 million-ish retail customers, over 1 million corporate customers. We're the biggest business bank in Great Britain.
Yes.
Why do I say that? Because when you're that big, you're moving systemic volume and value of payments. We are systemically important to the UK. We provide payments and accounts for everyone from kind of youth right the way through to large corporates and even the government, right? So we are systemically important. Circa 70 trillion in value we process. So when you ask the question about how do we monetize, you've got to be very cognizant of the volumes and the values you are processing and the integral importance that you are providing to UK PLC, whether it be merchants, businesses, corporates, or you and I on the high street trying to buy our teas and coffees. So when we talk about modernization, what are the big challenges? I wouldn't say there's particularly one. If I was going to name one, I'd actually say patience, which sounds really hard. But these things require patience and conviction.
Whose patience?
The entire group. Right? Because when you change payments flows throughout the entire organization, right the way from channel, whether it be the app, whether it be branch, whatever it might be, all the way through multiple systems and parts of the organization before it's back out again to either the scheme or the customer, right? Super important. So you have to have conviction and patience, because it's not a give us X million pound and we'll do this in a month. These are ongoing challenges, mostly driven by the need to be compliant, the need to be mandated, and the trick is, like the key is, as you're building the business case to your customer point, you do it in a way that isn't just, we're doing this because the mandate tells us to do this. We are doing this because A, the mandate tells us to do this, but B, we can do this for the customer at the same time, and C, we can actually improve our architectural estate and the way we do future change. So an incumbent bank, legacy infrastructure, all the big banks have it, right? You've got to be able to almost manage that legacy out, manage those systems and platforms that actually have improved or we need to move on to X. We're doing a lot of work moving our estate onto cloud, doing it API first. So it's all focused on being future-proofed where we can. But without that patience and conviction, that becomes very hard to do. And it's an ongoing annual challenge.
Definitely, and payments is needed internally, right, and across the group, but massively on the customer side, especially when instant gratification is the name of the game now.
Completely.
And when we're looking at real-time payments, of course, it's growing fast, but so is APP fraud as well. From your perspective, what do banks still need to figure out to make, let's say, faster payments more secure, but also still quick and manageable from the expectation of the customer?
Yeah, so two things, right? One, our fraud actually went down last year. But it has been growing year to year.
Yes, yeah.
And two, it is a constant challenge for us as an organisation and for the industry, but it is an industry challenge. When I say industry there, it's a community effort, right? So a lot of the fraud that will emanate in the AppScan space emanates from marketplaces. By the time it's got to the payment, unfortunately, a lot of the time, it could be too late. So there's a few things we need to do, right? We need improved customer education, because unfortunately, a lot of the time, the weakest link is the human in any chain. Right? And the level of sophistication that the criminals are working with now, AI has helped them, and AI will help us, right?
Yeah.
But it's helped them accelerate the avenues and the channels that they can kind of chip away at what we build up, and we spend billions of pounds trying to protect customers, right? Billions over the years. So we have to make sure that we're focusing that investment on what protects them. There was a phrase when I started payments, I've probably been in payments over a decade, frictionless payments used to be the phrase, and I remember thinking, not really frictionless payments, it's about appropriate friction. If I'm sending someone £1 million, not that I will, I want a little bit of step up and actually, are you sure? Is this right? Is it the right person? If I'm giving you £5, I'm less bothered about that control.
Yes,
it's about appropriate friction at the right time.
Do you think it's also communicated friction as well? The expectations are managed through communication.
Yes, and it's back to the education point, right?
Yeah.
So we're moving in a world rapidly where customers are more and more using the phones in our hands, right? And the devices in our hands or the watches on our arm, right? So we're moving in a world where actually the ability to speak to the customer is reduced because they're not coming into a branch, they're not talking to us face to face because they don't need to, they don't want to. They want to do it through the devices that they all have. But the challenge with that is it's not somebody saying, Tom, actually, you shouldn't be doing that. You can put that message in, but actually they'll just potentially go, no, that's fine, I still want to make this payment. We've got rafts of examples where we've spoken to the customer, we've stopped the payment, we've sent police to the payments, to the customer's house, and they still want to make the payment because it's their money. How dare the bank kind of stop them making that payment? So it's a real challenge of balancing that need, basically.
And it's their choice at the end of the day. Of
course it is.
Whatever it is. And of course, you mentioned AI, and I can tell that you're very excited about it, Lee, as well. But there is a lot of excitement about artificial intelligence, how it's going to modernize, of course, and personalize banking for individual users, for merchants as well. But how do you make sure that personalization also stays helpful, but at the same time doesn't pressure the users into decisions, of course, that's not in their best interest at hand?
That's a really good point. So the ethical side of AI is something that is uber important to us as an organization and to the industry, right? The acceleration and the growth of AI in some ways is terrifying. We've been using it for years, right? And a lot of customers will look at certain things, like we have something called Cora, where if you have a query online, you'll probably speak to Cora first. Cora isn't a human. Cora is AI and has been helping millions of customers over the last number of years. So the ability and depth they can go to is now improving with the evolution of AI. But the ethical side of it, and back to my control point, is super important, right? We have an AI code of conduct where we have multiple principles, kind of data principles, system principles. We have a priority of transparency and fairness, and ultimately making sure that we'll only utilize customers' data for their benefit and control. And this is the kind of the wrestling challenge we have within banking is utilizing new tech, but doing it in a way that is controlled, understood, monitored, because to your point, Tom, ultimately it's back to the customer. We want to make sure the customer is getting the best experience they can get,
of course,
but in the most controlled and protective manner.
I agree completely. And Money 2020, we're speaking a lot about this, but we're also speaking about something also quite topical, stablecoins and tokenized money movement across the industry as well. Right. It's been part of the conversation on a day-to-day basis here, but also part of that conversation is as well, from your perspective, how should traditional banks be thinking about their role in the evolving ecosystem there, and also the compliance remit perhaps around that?
So this is a very hot topic internally. I lead a lot of our forays into industry innovation at NatWest. We've been part of the UK regulated liability network. Easy for me to say. I've said it a million times and still get it wrong. We're involved in Project Agora. I was just literally on stage with the guys from BIS and the Bank of England. That's forays into the DLT world to help understand whether we can improve the existing money movement with the money that we own and control, the commercial bank money. The stablecoin piece is, I'm enthralled by it, right? So stablecoins have been around for 10 years. They're not new. They were there to kind of build a bit of credibility from the traditional crypto space, but they have genuinely exploded. I think somewhere around 240 billion is moved in stablecoin. That's big numbers, right? RTGS does 850 billion a day. So it's big numbers and it's big growth, but in the grander scheme of things, at this moment in time, it's still a drop in the ocean.
But the application is there for a real use case, yeah.
That will change. And you point on AI, I think what you'll probably see is the ability of agentic AI linked with stablecoins to really change the way commerce works. So Stripe, Amazon, Google, Visa, MasterCard have all invested heavily into how agentic AI can help customers at commerce. So we used to speak about PFM in open banking, financial management. If I want to say, look, I've got a rare pair of trainers that I want to get after, I want to spend this much, but I can't keep checking whether they come on. AI can do all that for you. That changes the game. The stablecoin piece, cross-border seems to be the kind of dominant use case at this moment in time. 95% of what's out there is USD. A lot of what I see is actually, it's a digitization of the dollarization that exists already. So dollars are already the dominant form of global currency.
Yes.
This is the simplification and digitization of that in the first instance. And where the likes of Stripe, all creators have done great work, is stepping into parts of the global economy where there are more problems with cross-border, there are more issues with remittance and transaction across different corridors and currencies. So they're solving pain points and challenges. Will you and I go and buy our tea and coffee with stablecoin? I don't know, I don't think so, is the honest answer. But like anything in payments, it will take the network, it will take adoption. And it's one of them crystal ball moments where you go, do you know what, I don't actually know what's going to happen. But as a bank, we need to understand, back to my customer point, where can we play to help their experience, help protect them? And ultimately, what role can we play in the broader ecosystem? A lot of the time, this money needs to get on and off into stablecoin, whether it's Tether, whether it's Circle. Banks are going to be needed to do that, right? So that's kind of the thing I'm challenging internally with.
Agreed. And of course, we don't have a magic ball here to figure out the future, right? But we can have another conversation at the next Money 2020.
I'm looking forward to it already.
100%. But innovation in banking, of course, you talked about legacy tech. You talked about some of the issues there, the agility, of course, of changing and adopting new technologies. What would you say from your experience specifically in innovation in banking kills promising ideas before they actually reach the customer?
It's a good question. So I'll use an example, right? I was on the stage with BIS talking about Agora. And the phrase I use, and I'll use it with you, sorry to recycle something, you need to be comfortable being uncomfortable. And I like that, mainly because it came to me suddenly and I thought, that sounds cool. But I've got a risk background, I've worked in policy, I've worked in product, P&L, etc. So my kind of traditional upbringing is do the business requirements, work out the business case, build the tech to meet that. But a lot of the time in this space, you're moving so rapidly, you're doing things simultaneously, you're doing things at the same time, and you have to be comfortable with that, which is a very unusual position to be in as a private bank, commercial bank, or as a public, as a central bank. But you have to be comfortable in doing that, because that's what the innovators of the world, the fintechs of the world are doing. Slightly challenging for us because we're super heavily regulated, so we need to retain in that kind of boundary, right?
Completely.
But you have to be comfortable being uncomfortable, and that's how you get the end game, which is ultimately, what's the customer outcome? And is it commercially viable? You have to keep those outcomes in your head.
100%. The market's always going to be changing, customer expectations are changing, and fraudsters adapting new technologies is going to be the forefront of what we're aiming to do. So what do you think is going to be the most innovative, let's say, push forward in the next year? We talked about stablecoins, we talked about a few other fronts as well.
I think you'll see real credibility in the DLT programmability space. So it's not just stablecoin. I think you'll see more of an emergence of how central banks want to play in this with central bank digital currencies. The challenge will be how you remove any fragmentation in that digitized world and how you make sure everything is completely interoperable. But I don't think there'll necessarily be one thing where you go, bang, that's it. It'll be a combination of above. As I said earlier, the blend of agentic AI with either existing tech and payments like open banking or things like stablecoins, which effectively is like almost the money for the internet that we never built. I think that's really powerful. Who will win in that space, I wouldn't like to predict, but I think there's some kind of clear leaders.
Well, the winners might not be evident yet or out there, but interesting you mentioning CBDCs as well. It's an interesting sort of area to look into as well.
Completely. So we spend a lot of time with the central bank in the UK.
Yeah.
They were focused on retail CBDC. It's probably, 2.5 years. We're looking at going into the sandbox to understand how we can play around with the use cases. We've got a couple of use cases ourselves that could play in that. But back to my earlier point, customer benefit and the commercial viability needs to be top of that. The challenge I think the central bank has, and the UK has, is almost like a public policy versus regulatory challenge.
A tug of war.
A little bit of a tug of war,
Yeah.
but they're on the same side, right? So the challenge is, I kind of look at, the central bank will want financial stability, monetary control, fiscal policy management, etc. They'll look at a USD stablecoin and think, how's this going to impact my core role and what I do? On the other side, in the same shot, HMT, the government, are going to be saying, well, actually, we want to foster and encourage growth, trade corridors with the states, etc. So there's this, I don't know who wins that debate, we're all on the same side, but ultimately it's someone needs to win out. Someone's probably going to be less happy than others. And then we've got us as a commercial bank trying to serve our customers, understanding, well, what's the regulatory regime going to look like? And how can we best serve them? And what's the role we can play to be as close to our customers as possible and protect what they do?
Definitely, and future-proofing is an ongoing task, right? You need to remain malleable, but also have a framework to
Completely.
grow.
That's about how we build our tech so that it's integratable whatever new tech comes. So that's where APIs play a big part, etc.
Yeah, API first, and of course, are you going to be moving AI first at NatWest as we move forward?
Well, so we've just partnered with OpenAI. I think we're the first UK bank to do that. So
Amazing.
I'd like to think we're one of the leaders in AI. As I've said before, we've used AI for years now. It's become a bit of a hot topic. It's like protein in the food market, right? You go into a shop now and everything's got a protein label. It's always had protein in, but it's now got a protein label on it. AI is the same. A lot of the time it's always had AI in it, or some form of AI, but it's now promoted as having AI in it as well. So there is a little bit of hype that we need to cut through, but genuine practical applications done in an ethical, fair and transparent manner.
I completely agree with you. And Lee, thank you so much for joining us on this podcast at Money2020. Valuable insights, and very happy to meet you.
Thank you. Great to meet you.
So that's a wrap from Money2020 here in Amsterdam. It's been a real thrill to partner with SumSub and their What the Fraud podcast. I really hope you've enjoyed those conversations. If you have enjoyed these conversations, then please do give us a positive rating or review on your podcast app of choice. And if you'd like to get in touch with the show, you can do that via the contact form at csuitepodcast.com, or you can find me, Graham Barrett, on LinkedIn. But for now, thank you for listening and goodbye.